Cell tower REITs have historically been incredibly strong investments. This is because their businesses are recession resistant, they generate significant cash flow, this cash flow is very steady and predictable, it's also growing rapidly each year according to the lease agreements, and then on top of that, because the data usage keeps on growing rapidly, these REITs are able to keep on adding more tenants and equipment on their towers, resulting in even faster growth. I'll put a chart somewhere on the screen here to show you the performance of American Tower and Crown Castle versus the S&P 500, and you'll see quite clearly that both REITs have massively outperformed over the long run, and that's despite being safer businesses and paying higher dividend income. Not surprisingly, the market typically tends to like these REITs, and overall during most times they've been priced at pretty high valuations. Before the recent crash they were actually priced at nearly 30 times FFO and very low dividend yields of about 3%. But today is very different. REITs are now out of favor. They've crashed since the beginning of 2022 by about 30%, and these REITs were not immune to the crash. You would have expected these two cell tower REITs to drop less than the broader REIT market, given that their businesses are recession resistant, their cash flow keeps on growing, and they have stronger balance sheets than average. But interestingly, we've actually seen the opposite happen. Both REITs dropped very significantly, and as a result now they are priced at historically low valuations, and this has led to a lot of questions from you about these two REITs, and the question that keeps on coming up is which one is the best to buy today, American Tower or Crown Castle? Hey everyone, this is Yossi. I run a small investment firm that specializes in REIT investing, and in today's video I'm gonna explain to you in two reasons why I slightly prefer Crown Castle in today's market environment. But before I get into it, could you please do me a favor and like this video? It really helped me a lot to grow this channel. And then secondly, also please let me know in the comment section below if there are some other REIT comparisons that you would like to see on this channel. Thank you very much. So there are really two reasons why I favor Crown Castle over American Tower at the moment. The first reason is that it's priced at a materially lower valuation and a much higher dividend yield. Currently, Crown Castle is priced at about 14.5 times FFO, whereas American Tower is priced at nearly 20 times FFO. I think that the market has priced Crown Castle at such a low valuation because it focuses too much on short-term results. Crown Castle has made it very clear to the market that 2023, 2024 and 2025 are going to be years of slow growth for them because they are now suffering some lease cancellations. If you follow this sector a bit, you probably know that T-Mobile recently bought out Sprint, and so now this is resulting in some lease cancellations, and Crown Castle is a bit more heavily impacted by this than American Tower. This explains why the market has priced Crown Castle at a discount relative to American Tower, but I think that this is a mistake here because real estate should really be priced based on decades of expected future cash flow, and therefore a couple years of slower growth really shouldn't have such a big impact. Sure, you could make the argument that Crown Castle should trade at a lower valuation than American Tower, but I just don't agree with the magnitude of the discount. Right now the spread is about 5 turns on an FFO multiple basis. I think it should be closer to 2 or 3 maximum. Then secondly, the dividend yield of Crown Castle is also very materially greater. At the moment, Crown Castle is offering a nearly 6% dividend yield, which is the highest dividend yield ever for the company, whereas American Tower is yielding just slightly over 3%. This much higher dividend yield can be explained by the lower valuation, but also the higher payout ratio of Crown Castle. But in any case, I appreciate the higher yield because it helps me to stay patient while I wait patiently for the long-term upside. It makes me less reliant on capital appreciation to earn attractive total returns over time, and I think that this is an advantage in today's uncertain environment. And then the second reason why I favor Crown Castle over American Tower is that I think that has a stronger catalyst to unlock value for shareholders. As we explained earlier, the main reason why it dropped so much and why it's priced at such a low valuation is because it's going through a period of slower growth. The market has been really quick to reprice the REIT as if its growth story was now over, but I think that this is wrong. If you listen to the latest conference call of the REIT, they make it very clear that this period is only temporary and their growth is going to reaccelerate beyond 2025. Here I want to read you a quote from the CEO from the most recent earnings call in which he discusses their future growth prospects. So here's what the CEO said. As a result, we believe we are positioned to return to our long-term annual dividend per share growth target of 7 to 8% per year beyond 2025 as we get past the remaining large sprint cancellations. So put simply, they think that they are now going through a period of 2 years where growth is going to be slower because of this temporary headwind, which are the sprint lease cancellations. But beyond that, they think that the growth is going to reaccelerate to 7 to 8% per year. And I think that as this occurs, as this growth reaccelerates, the market is going to reprice the REIT at a much higher multiple than today. Before the recent crash, Crown Castle was priced at 27 times FFO. Perhaps that was a bit too much, but just getting back to 20 times FFO would unlock about 30% upside from here, and while you wait, you earn a near 6% dividend yield. I think that American Tower also has some upside here, but I don't think that has quite as much upside, and its catalyst is also not quite as clear to me. The reason why Crown Castle is one of our top pick at high yield landlord at the moment is specifically because it has this strong catalyst. We think that there's a really clear path to unlocking value as its growth reaccelerates beyond 2025. I think that we're going to see a lot of investors rush back to buy these REITs, and this increased demand is then going to push the share price a lot higher. But today you're still able to buy it at a historically low valuation, a high dividend yield, and position yourself for high upside. Now, if you want to learn more about what else I'm buying in today's market, feel free to join my REIT newsletter, High Yield Landlord, for a 2-week free trial. I'll put a link somewhere in the description of this video. And once more, if you could do me a favor and like this video, that will really help me a lot to produce this content for you. Thank you very much, and see you at my next one. Bye bye.